In this video, I'm going to show you the things that you should never try doing when trading Forex or any financial market. Things never to do when trading in the Forex market. Number one, do not place two or more positions on same direction of a currency pair or any other tradable instrument because it is trending well and is giving profits. You have to stick to one trade at a time on that particular currency pair or any other instrument that you are trading at the time. If you still want to place a trade on that particular pair or any tradable instrument, you take the profit, then you replace. What I mean is this: for example, this AUD USD is giving profit, so you add another trade. It doesn't work like that. Keep this trade. If you want to add another trade, take the profit, then you re-enter another one. Sell. Don't forget to still go through the process before placing the trade. That is how it works. Not because it's trending well, it's giving profit, the indicators are showing that it's going to go more, so you place more trade on that. When you do that, it reduces your margin level and put your account at risk. Okay, so always make sure that you keep one trade on a particular trade, one trade position on a particular pair. Alright. 2. Do not enter a trade when there is no clear signal from your main entry signal indicators. For example, for you to enter a trade, the parabolic, for a sell trade, the parabolic has to kick. Okay, let me get an example. All right, so let's look at this. This is trending well. All right, but not because it's trending well you have to place a trade. You have to wait for the EMA 5, for the the EMA 5, that is the deep pink line, to cross below the moving average 12. When the 5 crosses so that it is below, before you place the trade. So even as it's moving now, you don't have to place a trade. You have to respect the rules. So here, though it's showing the dot is up and it's trying to cross, but still you have to wait. And you may find out that you may find a trend like this. If you just look at it from this side, you'll find out that there's nothing to trade. There is nothing to trade. This is a junk trend. All you need to do is move away from it. There is no clear indication here. You cannot risk your money on this kind of movement. When you do, it's clear that you are going to lose the money because it's not moving in any direction. There is no clear indication. If you just look at the trends alone, just look at it, so junk. So you just have to move away from it. Number 3, do not enter a trade just after taking profit. Wait for at least 5 to 10 minutes while you reanalyze the market and the conditions of the same currency or any other instrument that you want to trade with is clearly analyzed. You have to go through the same process as I explained in combining other indicators or combining indicators to analyze market clearly before placing trades. That process you always have to go back and analyze until you master them. If you master them, you can just look at it and then you will know what the market is doing. But make sure the indicators are well intersected. Alright, so basically number 3, it's for you not to just enter a trade just after what? Picking profit. Even when you are scalping, it's important that what? You check well, because market conditions can change anytime. Number 4, do not leave a profit on, no matter how small it is. If you appreciate it, then it's in the range that you actually pick profit. This may depend actually on your type of trading style, whether you are a scalper, day trader, swing trader, or position trader. So if you read the common foundation for trading Forex successfully, you'll find all these things, the characteristics that are what associating with each and every kind of what a trader. And it's important that you build a personality in trading, whether you want to be a scalper and a day trader, or a swing trader, or a position trader. You can master 1 or 2 or 3 of them, or at least 2, and keep to them over time. Then you'll be able to do the right thing and also keep that check, that personality check. It's important to build that character. Number 5, do not increase or decrease the stop loss at any time. Set the stop loss at a reasonable point and allow it through the trade. Once you set a stop loss, for example, let's say this is a profit. Okay, let's look at. So this is the stop loss, right? Just because the trade is moving towards it does not mean that it's going to take it. So you don't have to panic. You don't have to change it. Once you change it, it means that you are trading emotionally. And then it means that you will be out of the market soon. You have to maintain the same thought that led you into entering the market. Keep it such. Don't change it. Don't increase it and don't decrease it. Leave it. That is where you are comfortable. Yet, that is the loss at which you are ready to take. That is the loss that you are ready to tolerate. So let it be and let the market run. Once you begin to do that, you will definitely become emotionalized. And once your emotions begin to get in you, you will start placing trades again. And then you will overtrade the account and eventually blow the account off. So always make sure that you do not increase or decrease the stop loss orders. Take profit. You can take profit and re-enter. There's no problem with that. But with the stop loss, always make sure that you keep it where it is. So when you are placing the stop loss, make sure that you place the stop loss at the point that what you are comfortable at. Of course, when entering the market, the first thing to think of is how much you are ready to lose before how much you are ready to make. Okay. Number 6, do not interfere with your placed trade. Stick to the plan and trade the plan. So plan the trade and trade the plan. And that is why you don't need to rush into placing trades. You need to have a journal where you know that at this price or at this account balance, these are the number of trades and these are the lot sizes that I will be trading. And it's always best to keep to the same lot sizes that you are using until the account grow to a point. 7, do not enter a trade after closing a trade in a loss. Mostly, immediately you close a trade in a loss, you find out that you replace a trade on the same currency pair. It is wrong. You should let go that pair or that instrument and look for a different one. And of course, do not just place trade just after closing a trade in a loss. Allow yourself to hold back. After that, you bounce back into the market. Then you will be able to make the right decision. Otherwise, you will be taking revenge and then it will come against you. Number 8, do not place a trade against the trend if you are not well vexed with counter trading or it's not your actual style of trading. Not because a trade is moving against you, so you decide to counter trade it. What it means is that you place a trade, this is a sell, and you see it going up, so you place a buy. No, this can be going and then it will automatically just change and be here. So you don't have to do that. Always stick to your position. It is very, very, very important. It is very important. Do not use short-term indicators for long-term trading. For example, you are scalping. If you are a scalper, you'll be using shorter time frames. So if you are a day trader, you cannot be using shorter time frames and indicators to be placing trades. Your analysis will always be wrong. So I advise you always stick to the 4 hours, which is in between the shorter time frames and then the longer time frames. At least be in the middle. Do not place trade immediately after economic news or when someone gives you entry signals. Make sure you reanalyze the signal first before placing the trade. It is very, very important. Not because someone says that, oh, this trend, this is buying, this is selling. That is why you know or you are learning how to use the indicators. Check with your indicators. If they are all in line with whatever signal you are giving, then you can go with them. Then you can go with them. That way you will also know that you are going according to your plan. When an economic news comes, anything can happen. So if you are already not in and you don't know how to trade the news, do not trade or go into the market just after the news or even before the news comes. But if you know how to trade the news, you can use pending orders and to set your trades down. But you need to make sure that you know what you are doing before you place the trade. So basically, these are the basic things that what you should never do when trading in the forex market. And also, do not increase your lot sizes just because your account is growing. All right, stick to these things and they will do you good and you will profit. Thank you.